Ladies and gentlemen, I welcome you all to the H2 and FY25 post earnings conference call of Kaka Industries Limited. Today on the call from the management team, we have with us Mr. Chintan Buddha, Chief Financial Officer. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risk and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to brief us about the business and performance highlights for the period ended 31st March 2025, the growth plan and vision for the coming years, post which we will open the floor for Q&A. Over to you, sir.
Thank you. Good afternoon, everyone. Thank you for joining us today on this earning conference call. It's my pleasure to present an update on our performance at Kaka Industries Limited, share industry insights, and walk you through our strategic direction for the coming quarters. Over the last 6 months, the PVC and UPVC profile door manufacturing industry has remained resilient despite some macroeconomic uncertainties. Despite macroeconomic challenges, overall sluggish demand, the Indian building materials, more particularly interior solution sector, continues to benefit from sustained demand for durable, recyclable, and cost-effective materials, where PVC-based products are gaining greater acceptance in both urban and semi-urban markets. Interestingly, while the frequency of home renovation has reduced compared to earlier years, this shift present a unique opportunity for companies like ours. Homeowners are now far more intentional and selective when they decide to renovate, seeking durable, low maintenance, and value adding materials. This is where UPVC based furniture and modular products are coming into play. We are seeing increasing preference for UPVC furniture as a long lasting, water resistance, and sustainable option, especially in kitchens, bathroom, and utility spaces. Our end use sector, the real estate industry, has shown encouraging momentum over the past year with continued demand in the affordable and mid-income housing segment, supported by strong government push and improving home affordability metrics. The resulting boost to interior fittings, modular solution and door frame systems has been beneficial to our value chain. Now, let me highlight our company's performance and milestones. As many of you are aware, commissioning of our new manufacturing facility at Lasundra was partially delayed due to awaited dedicated high tension electricity line connection. Until January 25, our operations were running below installed capacity, which impacted our production and capacity utilization. However, I am pleased to report that as soon as the power line was made operational, we witnessed a significant uptick in the production and we achieved highest ever monthly sales in the month of January 25. This clearly validates the robustness of the demand and our preparedness to meet it. On the branding front, we have initiated major steps toward repositioning our brand and building awareness across building material categories. From digital campaign to targeted influence outreach, we have launched aggressive marketing initiatives focused on creating product loyalty among influencer, contractor, and channel partners. A cornerstone of our sustainability and efficiency strategy is our upcoming 7.5 megawatt captive solar power plant at Lasundra, Gujarat. This 25 crore investment expected to go live by August 25 will allow us to reduce our monthly power expenses by approximately 40 to 50 lakhs, yielding saving of around 55 and reinforcing our commitment to clean energy. We are also making a concentrated push to expand our domestic footprint. This includes both deepening presence in existing market and unlocking new ones. We are investing our distribution network and scaling up our sales force and marketing support to achieve broader reach and faster service. Now, highlights on the financials. Our revenue for the year grew by 16% year on year. EBITDA margin improved by 71 basis points. However, the net profit declined marginally by 1%, primarily due to 125% rise in the interest expense following a 32 crore term loan from for our new facility and the HT power line. 106% increase in the depreciation, reflecting a 26 crore capital addition in financial year 25 and 31 crore in financial year 24, totaling 57 crore over the 2 years. While these investments have increased short-term cost, they set the foundation for the future volume growth, enhance efficiency, and year-on-year marginal cost reduction. On the operational front, we have significantly improved our supply chain capabilities. Our aim is to bring down the order fulfillment time from the current 10 to 12 days to just 2 to 3 days, dramatically enhancing our dealer experience and the customer responsiveness. Looking ahead, we are targeting 40% volume growth in the current financial year. With the infrastructure now in place, expanding market opportunity, aggressive influencer marketing, and full production ramp up underway, we are confident in our ability to achieve this goal. In conclusion, Kaka Industries at the inflection point. We have laid the groundwork for long-term growth through capacity expansion, renewable energy integration, brand development, and deeper market penetration. The future holds great promise, and we look forward to delivering enhanced value to our stakeholders. We have uploaded the investor presentation on the exchange website. Please go through the presentation in case of further information, or you may contact our IR agency or the management. Thank you once again and for your trust and continued support.
Thank you,
Yes,
sir.
sir. Yeah.
All those who wish to ask a question may use the option of raise hand. In case you're unable to raise hand, you may put a request in the chat box and we'll invite you to ask the question. So we'll take the first question from Mukesh Panjwani. Mukesh, you can go ahead.
Yeah, hello, sir. Am I audible?
Yes, sir.
Sir, what is the current capacity utilization?
Sir, it is 50 to 60% in the different categories.
Okay. Overall,
Yeah.
around 50%, we can say.
Yes.
Okay, okay. And right now, what is the current run rate in the terms of revenue? As you said, in January, it was the highest turnover ever.
Yes.
So after Jan, like Feb, March, how were these months in the terms of
I
revenue?
mean, month on month, I mean, January, February, March was the same, and the
Okay.
April was the higher than the January.
Okay, okay. So easily we can in that run rate we can easily touch like 40% growth.
Yeah, 40% in the volume growth. Yes.
Okay, and what is the what would be the maximum revenue we can generate from this current capacity?
It is around 400 crore.
Okay, okay.
Yeah,
And
but we have the space, and we can also improve the existing machinery also.
okay, okay.
Yeah.
And as you have mentioned that we are putting some capex for solar.
Yes,
So,
sir.
what would be the impact on bottom line from this solar capex?
So it will be around month on month basis, 40 to 45 lakhs, 50 lakhs around, because it is based on the generation and the consumption of the electricity.
Yeah, but
Right.
there would be interest expense also. It will also increase our interest expense.
Correct. So after that, I am saying that it is 40 lakhs
Oh,
monthly.
that is interesting. In that case, like we can add around 4 to 5 CR in our bottom line.
Correct, sir.
That is very interesting. So it will also enhance our PAT margins in that case.
Yes, sir.
Okay. So going ahead, what kind of PAT margin we are targeting?
So for for this year also, it will be around 6.5 or 7 maybe.
Okay.
Because the interest and the depreciation will also come into play in this year also, because it is on the higher side.
Right. But this
But
year, EBITDA margin should improve, isn't it?
yeah, it is also improved in this year also compared to
Mm-hmm.
last year.
Because operating leverage will kick in and it should improve.
Yes.
Okay. So next year, what kind of PAT margin we should expect?
6.5 and between 6.5 to 7, and this solar pet will also come into play.
Okay. Okay, sir. That's all from my side. And all the best. I'll come in the
Thank
queue.
you. Thank you.
Thank you, Mukesh. We'll take the next question from Tanvi. Tanvi, you can go ahead, please.
Yeah, just a quick question. So first, following up the previous participant's answer, so the savings in electricity cost, will that be offset by the increase in depreciation interest?
So it will be, I think, in rupee terms, I have calculated that this will be the saving, this 40 lakhs around in on month basis. So we have to, I mean, check whether it will offset the depreciation, increasing depreciation.
Okay. And so just one thing, with the new capacity, have we fully ramped up, I mean, the new capacity that we've started? Are we-
See what happened in the last year was that up to the December we were not able to utilize it, right? And after that we have started utilizing it. And we try to get the optimum capacity utilization, but somehow we were not at the top to use that full capacity, right? But now from April onwards, we are achieving that 65% of the installed capacity.
This 60% is for the new plant that you've set up, or it's the overall
Total overall.
overall 60%? And sir,
Yes.
just one thing, you've said that February and March was in line with January and April was better than January. So can we expect a run rate of 20 CR per month for the coming year?
Yes. That is our target for this year.
Okay. Thank you.
Thanks, Tanvi. We'll take the next question from Harleen Kaur. Harleen, you can go ahead, please.
Hi, sir. Sir, can you please share how has your realization per ton, gross margin and EBITDA per ton has moved over last 3.5 years?
So gross margin is around 35% for the financial year 24-25. Yes,
While
and
in this
EBITDA,
quarter,
sorry.
at margin level, it is lower due to, I presume, the new overheads of the new plant, where there is a lag in revenue. Where do you see it sustaining on a gross margin per ton and EBITDA per ton basis?
So EBITDA per ton is around 14,500 as of now, and the gross margin is 35%.
Okay, sir. Sir, one more
Yeah.
question. Post reaching
Yes.
close to rupees 400 crores revenue, what is the scope for expansion at the new plant and what will be the cost of the brownfield expansion?
So, ma'am, for with the current facility in place, we can achieve 400 for from these machineries and the infrastructure. In case we need to enhance the production capacity, we can place the new machinery in this plant itself, and we can improve the old machineries with the new one.
Okay, sir. Thank you, sir.
Thank you, ma'am.
Thanks, Harleen. All those who wishes to ask the question, please use the option of raise hand.
So there's a question in the chat from Mr. Deepak Juneja. How is the competitive scenario currently?
So, the competition from the domestic, we have the Chinese import and the manufacturer from the different region also they are giving the competition. But what we have the edge is of we have established presence for last 20 years. We have the wide product portfolio and the new plant this giving us the edge to compete with them.
Thank you. There's a one more question in the chat that hello sir, can you please tell us what is your current order book and what will be our target for FY26 and FY27?
So we do not work on the order book because we operate through dealer and distributor. So they put the monthly requirement. So there is no order book as such. And for the next 2 financial year, we can grow 30% year on year.
Okay, so then we'll take the next question from Karan Sharma. Karan, you can go ahead, please.
Hi, sir. Thank you for the
Yes.
opportunity. Sir, like one of the previous participant asked, can you share revenue per ton, gross profit per ton, and EBITDA per ton? Since the answer we got was not clear when she was asking. So and how it has moved over last 1 to 1.5 years, and how was it in H2, and where do you see it coming in the coming year?
Okay. So the EBITDA per ton is around 14,500.
Okay.
Yeah.
Uh, Gross profit per ton?
Gross profit, see, gross margin is around 35%, and per ton it will be
Like average realization per ton?
yeah. Wait a minute. So gross margin is around 30, 38, 39 rupees.
Your gross profit margin basically.
Yes, yes, per kilo.
Yeah. So okay. So can you just share average realization also per ton? Because from there we can, I think, derive the gross profit.
Yes.
Okay. All right, sir. Thank you.
Yeah.
Thank you, Karan. We'll take the next question from Keshav. Keshav, you can go ahead, please.
Hi, sir, the EBITDA per ton of 14,500 is for the year or for the half year?
For the year, for the year.
Okay. And is it the right understanding that the inventory has gone up because we have scaled up and therefore we should take the inventory days as a percentage of recent sales?
Correct, correct. We actually there are lots of SKUs in our product portfolio that we also want to reduce the SKUs because the number of SKUs compel us to keep the stock in hand to serve the customer in time. So as of now, it takes around 10 to 15 days, and to serve the customer in the I mean in the minimum time we have to maintain the stock.
Okay, but on a fully scaled up basis, when our utilizations go up, what should be the overall cycle, working capital cycle, and also the inventory days?
So in inventory, we want to keep it around 50 days. So it will reduce drastically in the coming time.
Okay, and sir, so I'm new to the company, so I just wanted to know the commercials or the capex we've done. So how much we spent and how much capacity it has added in the past 1 year.
We have added around 60 crores in the last 2 years in the civil construction and the machinery. So in the different categories, we have increased the capacity PVC profile. It was doubled from 15,000 to 30,000 ton per year. 200% in the WPC manufacturing, 100% in UPVC window. So that is what we have added in the last 2 years, the production capacity.
Okay, and in this, what is the utilization for the compounding facility, and how should it impact the margins this year?
So compounding, it is being utilized at fully, and that the integration of this compounding will give us the edge in the margin efficiency.
Okay, but sir, the compounding facility, I presume, is lesser than the profiles that we make. So,
Correct.
should we see some margin reduction in this year when we grow by 30-40% as we're targeting?
So this is a bit of a technical part, because what we have installed in the compounding, that will be utilized for the particular product, and for the colored or the different, I mean, other than the standard product in PVC profile, we will use the normal method for the production. So this compounding will is for the standard product only, to save the time and the efficiency in the production.
Okay, sir, just sorry to circle back on that again. As we are at this level, also doing 100% utilization on compounding. So as the overall PVC profile sales and everything also goes up, what will lead to margins improving? Because I presume that we are already fully utilized on the compounding front.
Right. So behind the logic of this compounding, we wanted to save the manpower cost and the reduction in the wastages, because what was happening earlier, that at the time of composition and the mixture of the product at the individual each machine level, there was a problem with the manpower also and the mixture also. So mitigate the problem of this, we have installed the compounding. So we are looking forward that we will save in the manpower cost, because still it is around 2 to 3 months, and we are using the at the best of this compounding facility, right? So ultimately it will save us the I mean manpower cost. I cannot comment on the exact numbers, but definitely I will give you the numbers in the coming time.
Okay, so just lastly, so even for the scaled up capacity, our EBITDA per ton should remain or improve. That's the correct understanding, right?
Yeah, it will improve. Definitely, it will improve.
Okay, okay, fine, sir. Thank you so much, sir. All the best.
Thank you. Thank you.
Thanks, Keshav. We'll take the next question from Pritesh. Pritesh, you can go ahead, please. Pritesh. Okay, we'll take the next question from Deep. Deep, you can go ahead, please.
Yeah, thank you. So since you work majorly through fabricators or dealers, how does brand advertising help your business?
I mean, it helps us to I mean, the customer does not have the knowledge of this PVC product and the uses of the PVC product, because there are lots of areas in the domestic that people doesn't know about the utilities of the PVC products, right? So that helps us to aware the customers.
Okay, sir, got it. So what are your plans to increase your target geographies? Can you share your revenue breakup region-wise in India, like north, south, east, and west?
So if I can give the state-wise, the major 63% is from Gujarat, and then equal from Rajasthan, Maharashtra, Telangana, Karnataka. And we want to improve the percentage of the turnover segregation in these states only as of now.
Okay, sir, got it. Sir, are there any market opportunity to tap in export? And if yes, are there any plans for the same?
So actually, we are coming into the SPC flooring. It was delayed by, I mean, 4 to 5 months now. But now, in this month or in the next month, we will be in the market with the SPC flooring. And for SPC flooring, we are targeting export.
Okay, sir, got it. That's it from my side. Thank you.
Thank you.
Thanks, Deep. We'll take the next question from Varun. Varun, you can go ahead.
Hi, thanks for the opportunity. Chintan bhai, compared to last year, what is the volume growth? Revenue has grown from 170 to 198. What is the volume growth?
Volume growth is around 17%.
Okay. And EBITDA per ton, you said 14,500. What is the
Ji.
realization per ton approximately?
Uh,
Approximately.
Approximately per ton you want, right?
Ah.
1 minute.
Or if you don't have that figure, going forward in the next year, you feel that the realizations have bottomed out, and can we see a uptrend in the realizations, or are there any risks of further downtrend?
Yeah, I mean, there is actually these prices have bottomed out actually.
That is what I'm trying to understand. Do you feel that the
Yes.
prices have bottomed out, or is there any further risk of downside?
No, it will come down if the raw material prices goes down. We have to lower the prices.
Okay.
Yeah.
If the demand picks up,
So
you feel that
uh,
the realizations can go up next year?
no, I think we are seeing that the raw material prices are going down. So the realization per ton or kilo will go down. So currently it is 110 rupees per kilo.
Okay.
Yeah.
And whenever we fix profit, do we fix it as a percentage or on a per ton basis? Absolute number
No.
fix, or do you decide a percentage and add that profit? What is your profit?
No, per kilo we generally add the margin and the overhead cost per kilo, not on the percentage basis.
Okay. And what is our plan to reduce the debt going forward, maybe in the next 1 or 2 years?
So as of now, there is no plan to reduce the debt. But
Okay.
in case if the opportunity comes, we will go for the, I mean, equity also.
Okay. And one last question before I come back. Our distribution network is one of the main factors to grow our business. As of now, what is the number of dealers or distributors we have, and going forward, how do we want to expand it?
So as of now, around 300 plus dealers and distributors
Okay.
are with us across the India.
Okay.
And till now, we were using the pool method. I mean, if the dealer wants the product, they will call us and they put the order with with
Okay.
the factory, right?
Okay.
But now, in this current year, we want to expand the sales force also, and it will be on the push basis. So, targeting the 4 to 5 states which I mentioned,
Okay.
we will, I mean, recruit the sales force and will push the product sales.
Okay. So thank you for hosting this call, and wish you all the best for the next year.
Thank you.
Thanks, Varun. We'll take the follow-up question from Tanvi. Tanvi, you can go ahead, please.
Just a couple of questions I had starting with. So, what would be your maximum capacity utilization? You said for the coming year it would be around 60%. So, what would be the maximum capacity utilization that we have, considering the new capacity also?
So it is depending on the product sizes. We experience that the maximum capacity we can achieve is 80% of the installed capacity in the different categories of the product and the different sizes of the product. So we cannot assume that this is the maximum capacity, but if the product is right and the machine is right, we can achieve the 80% of the installed capacity.
Okay, okay. And one thing, can you just give us a breakup of the installed capacity in terms of PVC profile, in terms of, I mean, metric tons, PVC profile, WPVC, UPVC, roofing and cladding?
Yeah, PVC profile is around 32,000 metric ton per annum. WPC sheet and frame is around 12,500. UPVC door and window is around 3,200.
Okay. And PVC roofing, cladding, ceiling?
PVC roofing is around 1200, and cladding and decking is also 1200 around.
Okay. So approximately your total installed capacity is 50,100 if I look across
Correct,
the world.
correct. And the maximum we can achieve is around 37,000.
Just one question more. So when we talk about the revenue concentration, you previously highlighted that PVC is from where most of the revenue comes. So if you could just give us a breakup of revenue concentration across these sectors, PVC, UPVC.
Yeah, this PVC sheet and section is around this year it is 55%. WPC is around 26%, and UPVC window profile is around 6%.
But
And
I think PVC is the highest margin product that you have.
No, all the three have the same margin. Comparatively, UPVC window is the higher margin.
Okay, but its share is the least. It's approximately 6% for this year.
6%, yeah, it is on the lesser side, yes.
Okay, and just one more question. Okay, and can you give your volume in absolute terms how much you've done in FY25 and how much you target for FY26?
Okay. So current in the last year it was around 18,500.
Okay, what is your
Yes.
target for FY26? When you said
It
it's
is
50%
it is
year-on-year
around
increase,
40% in volume.
okay, 40% in volume and 30% in revenue.
Yeah, revenue I cannot comment because there may be price reduction or price revision in up move also.
Okay, but mostly are you able to pass on the prices?
Yes.
Okay.
Thanks, Tanvi. We'll take the next question from Atul. Atul, you can go ahead, please.
Thank you for the opportunity. Just wanted to understand about your, sir, just wanted to reconfirm. You mentioned that 30% revenue growth in calendar 20, financial year 26 and 27. Is my understanding correct?
Financial year 25, 26, 40% on the volume growth, and for the next 2 to 3 years, it will be around 30% year on year.
Okay, 40% in year one and 30% in year two of India. Okay,
Yeah.
sir. Thank you so much. All the best, sir.
Thanks, Atul. We'll take the next question from Deepak. Deepak, you can go ahead, please.
Sir, am I audible?
Yes.
Yes.
Chintan sir, my question is regarding
Deepak, your voice is not clear.
profitability.
Deepak, your voice is not clear.
Well, you see, I understand that we are paying. Can you hear me, sir, now?
Yes,
Hello?
yes, now clear.
Sir, can you hear me now? Sir, actually, my question was like regarding profitability. How are we going to improve our PAT, considering that we are going to pay a lot of interest for the term loan? Apart from the electricity cost, like, what is our other strategy? And are we looking, sales also increasing because of the new factory expansion? Thank you.
So, as you know that we have expanded the capacity, we will definitely increase the sales in the volume and the revenue terms also. So definitely it will help us to increase the PAT in the profit after tax, apart from the electricity saving. So EBITDA, EBITDA level percentage will also increase, and the absolute term also it will also increase because interest cost is constant, right? And the depreciation is this is the maximum. It will go down in the coming time.
Thank you. Wishing you the best.
Thanks.
Thanks, Deepak. We'll take the next question from Pritesh Vora. Pritesh, you can go ahead, please.
Hello, sir.
Yes.
Sir, you mentioned about this volume and revenue growth 40% this year and 30% going onward. So, what are the ways you can achieve this? Is this just a production capacity you have increased, that's why you are confident, or are you opened up new sales channel, new distribution, or how do you so comfortable selling 40% this year?
Okay. So earlier, in the last two years, we faced the supply constraint. That was the major confidence we have that we can sell the product. And because at every time 30 to 40% of the total order we were not serving on time, so they were procuring from the another I mean manufacturer or somewhere else. So that is one. Second, we are expanding our sales force in the selected areas, and we are also collaborating with the influencer across the categories. Yes, so that is why we are confident that we can achieve this in this current year 40% and 30% year on year.
Okay. And among the segment wise, which you mentioned, you sell PVC 55%, UPVC 36%, and window you are saying 6%. How does the segment profile will change over next couple of years?
So we expect that UPVC window and profile will definitely increase in the current year, and WPC is 26%. So it will also go up. I mean, the major contributor will be WPC and UPVC window in this year.
Okay, you are saying UPVC window is 6%,
Yeah.
WPC is 26%, is it?
Yes. Yes. Yes.
And PVC is 55%.
55%. Yes.
Okay. So, sir, how do you see this moving? Like, say, 3 year down the line, what do you see
Hmm.
this? Because your UPVC window is a higher contributor, right? How do you see the mix change?
The I mean, 55% in the PVC profile.
PVC. Uh-huh.
I think it will be constant. WPC and UPVC will increase from this year because we have expanded WPC in capacity is doubled. I mean 200%, and for the UPVC it is 100% increment in the production capacity because as per our expectation and the experience, we have added the capacity.
Understood. Understood. Right. Uh, and how does the polymer price increase or decrease impact our margin?
Generally, sir, we pass on the increase or decrease on the customers. So as of now, it is on the decreasing mode. So the prices of the product will definitely go down, and at the if it is increasing, then we pass on the increased price to the customer.
Okay, so do you keep the fixed EBITDA conversion margin with you? This, like say, if PVC is 100 rupees, for example, I don't know what is the price right now, but if 100 goes to say 50, your
Hmm.
margin of say your margin of 20%, for example, does it
Hmm.
retain like that, and then you charge instead of 120, you charge 70 when 100 goes to
So
50?
up to 5% we retain either side, and then we pass on.
Okay, understood. Okay, sir, wish you all the best.
Thank you, sir.
Thanks, Ritesh. We'll take the follow-up question from Keshav. Keshav, you can go ahead, please.
Yeah, thank you, sir. Sir, what is our go-to market strategy for SPC and what will be the target market?
So we are targeting export for the SPC, US and Europe. So we are collaborating with the different exporters in India only, right, as of now. So I mean, in 2 to 3 months, we have the clear idea on the strategy side.
Okay, so we'll be supplying to players that are directly marketing to players like Walmart in the US.
Correct.
Okay, so that means I was coming to that, the working capital cycle, if we were targeting directly the foreign clients, it would have gone up. So we should not see any drag on a working capital cycle when SPC comes in.
So as of now, we are not thinking on that because we want to, first start the production and we want to market our product and the reach of the customer. So we have not thinking on the working capital as of now.
Okay. And is there an indicative ask from the customers themselves for this product that they are looking forward to sourcing this from you, and we might be able to sell whatever capacity we come up with?
No, we have discussed with the various exporters and the local persons also what the to get the idea about the export market of SPC flooring. So as such, we do not see the domestic market. Uh, so as of now, we are just discussing and we want to place our product in the market. That's it.
Okay, got it, sir. And what is the quantum of supply from India to the export countries for SPC?
Sir, I do not have the exact idea. The you are mentioning that the market of the SPC flooring in
Yes.
from no, I don't have any idea actually.
Okay. Fine, sir. Thank you, and all the best.
Thank you.
We'll call Mahesh Attal to ask his question. Please drop a message on chat. Mahesh, you can go ahead, please.
Yeah, hi. I'm sorry I've joined a little late. Uh, so my first question would be on the recent capex that you have done, both 24 and 25. Okay, 24 you have done some capex and 25 you have done some capex. So if I may ask, what could be our potential revenue? Let's say if we want to do a revenue today, I mean, if I run my plant at the optimum capacity, what numbers are we looking at? First, that would be my question, and then follow up would be like our margin profile has been, doing like fairly good. I mean, it has improved and it's being maintained pretty well. So, do you think what should be our broad criteria of margin going ahead, even at the higher increased revenue scale? Because you are also talking about exports now. So, what do we take as an average thing when we are talking of the numbers of FY26?
Okay. So for the first question, we can achieve the 400 crore from this production facility with the same set of machineries and the infrastructure we have. We can definitely improve the existing machinery, and we have some space also in the current facility where we can put some more machineries, right? And for the second question, we want to improve the margin efficiency. That is why we are coming into SPC flooring, because it is export oriented market, and there are good margins with the SPC flooring. And for the current existing portfolio we have, we do not see the major upshift in the margin. We can definitely achieve it through margin efficiency through our production capacity.
What I fail to understand is that why have we not grown our revenues this year? Maybe we have grown around 13-14%. What stopped us this year from growth? Because when you say that you are having enough capacity to do up to 400 crores, obviously some of it must have gotten added in the later part of this year. But then what has been, a drawback for us for this year, for this particular year?
So till the December, we were struggling to get the dedicated electricity line. So last 3 months we had the opportunity to gain or the have the maximum production capacity. So for the ninth month we have not used our installed capacity at optimum.
So if let me put it this way that if suppose if you would have used this for the entire 6 months, what could have been the way you have used it in the last 3 months? What could have been the revenue potential of this facility?
So optimum is 400 crores, and
No, I am
if
talking
we
about
would,
the HT
if
line.
yeah, yeah. So if I get the ST line at the starting of the year, we have achieved, we must have achieved around 250, 260 crore.
Okay, so basically, just because we were not able to get that on time, we are basically what you're saying is there are orders in hand, but you were not able to fulfill it because of this thing, right?
You cannot say order on hand because we are not working with the, I mean, we are working with the dealers and distributors, so they put orders month on month basis. But we identified that we would have got that 50, 60 crore more if we had the opportunity to use the optimum capacity.
Okay, so fair enough to say that next year these numbers are going to come, and over about that there will be some achievement. Any guidance that you want
Correct.
to give for the next year?
So 40% in the volume, 40%
Volume-wise.
increment in the volume, yes.
Okay. And see, I have one more question, which is like when we say Kaka as a brand, so what are your strongholds? Like which region is your stronghold and where are the areas? Because I see a lot of your competition doing a lot of advertisement marketing into new geographies. So where are we on that? And when could we see new geographies added to our thing?
So we are strong in Gujarat. As of now, 60 to 65% revenue is from Gujarat. And we are exploring our strong region in the, I mean, we can say in the state of Maharashtra, Rajasthan, Telangana, Karnataka.
Have you been doing any marketing spend in these areas?
Yeah, at the digital front and the traditional methods like shutter painting and wall painting, we are already doing it.
What was our advertisement expenditure last year? Absolute.
In rupee terms, it is around 4 crore around.
Okay, so what percentage of it's around 2% of our sale, right?
Yes.
Okay, all right. So do you see anything you want to enlarge it for the next year? Maybe advertisement or marketing cost?
Yeah, definitely it will increase because if you want to, if you want to go aggressively in these areas, we have to push the advertisement cost on.
Any guidance on that for the next year?
No, as of now, we have not decided yet.
All right. Okay. All right. Thank you so much.
Thank you.
So there are some questions in chat. I'll only ask you the one which we've not touched upon till now. There's a question from Manu which says, how many distributors have you added this year? And how is the distribution channel shaping up?
So at the distribution, numbers front, as such, we have not added any new distributor because some of the distributor may have gone and some may have added in the last year. So basically, for the first 9 months, 10 months, we did not have the confidence to serve them. So we didn't go there to add the new distributors. But now definitely we will add more distributor in the region I have said.
There's a question from Shubham Jain. Other peers we've seen getting large orders from players like DLF, etc. Can you also receive these kind of orders, and can you share some big clients whom you cater to?
So we want to focus on the renovation part, on the retailers and the government entities. So as of now, we are not directly in the touch with the large real estate players. Definitely our distributors and the dealers or the local players who are associated with are definitely in touch with them, but we are not directly going there as of now.
The other question is from Manu. Have you introduced any new products in the last year? How is the acceptance in the market?
We have added fluted panels in the last three months, and it is very much accepted. And we have started with the first one machine, and now we have three machines for that.
Another question is from Riddhi Agarwal. Working capital days have increased slightly. Are there any specific challenges in receivable or inventory management, and what steps are you taking to optimize the cash conversion cycle?
So there is a challenge with the inventory management, and because there are lots of SKUs we are as of now holding with our catalog and the promises. So now we want to reduce the SKUs, and we want to serve the customer on time. So around 10 to 15 days we are taking as of now, and we want to reduce it to 2 to 3 days. So for that we have to reduce the SKUs also. So that is what this year we are working on that.
There's another question from Tanvi. Another peer is delivering EBITDA margins of 15 to 16%. Do you think you'll be able to achieve this in the future?
So currently, year on year, if you see that we are increasing the EBITDA margin, so definitely we are looking forward to improve the EBITDA margin through production efficiency, and the new plant will help us to improve the EBITDA margin.
Okay. So that is the last question for the day. Would you like to give any closing comment before we end this call?
Yes, thank you for the thank you for the participation, and we are looking forward to have this fantastic year for the from the Kaka Industries side. Uh, thank you everyone.
Thank you, sir. Thank you to all the participants for joining on the call, and thank you to the management team. This brings us to the end of today's conference call. Thank you.